Hello and welcome to Co-Founder Chats. My name is Ryan Correa, and I'm joined by my co-founder and in-house expert, Alexander Morsink. We
Hello.
run Equivesto, a Canadian online investment portal. Today, we are talking about exempt market dealers. Alex, to start off, what is the exempt market?
The exempt market is called the exempt market because really that's how the Canadian securities regulators refer to private investments. Essentially, when you're a public company, so listed on the stock market or a public investment, you have to file something called the prospectus or a prospectus when you officially go public and start being on the stock market. And through securities law, anytime you raise capital and you don't have to sort of go public and file a prospectus, you use something called a prospectus exemption. And so they refer to any capital raising activity that's done where you use a prospectus exemption as the exempt market because you're exempt from all these sort of reporting requirements, prospectus, things like that. And all private investments basically have to follow all of these private rules, these prospectus exemptions. So all private investments in Canada are referred to as the exempt market.
Perfect. And that leads into the question, what is a prospectus exemption?
Yeah, so a prospectus exemption is essentially a set of rules that allows companies or businesses to raise capital or receive investment without needing to go public. When you go public and list on the stock market, you have to file a prospectus. And so when you raise capital and you're able to basically avoid doing that, you're using one of several sets of rules, which are all prospectus exemptions. So they allow you to raise capital, remain a private company, not become a reporting issuer, and you remain sort of separate from going public, and you're using a prospectus exemption to do that.
Excellent. And what is an exempt market dealer?
That's a great question. If you walk into a bank and you want to go buy some mutual funds, not exchange traded funds or ETFs, but mutual funds themselves, you as a regular person are not actually allowed to buy mutual funds yourself. You have to sit down with what the bank calls a financial advisor, and that person has to help you buy mutual funds. And the reason being, the Canadian securities regulators, the government doesn't think that people are capable of necessarily choosing between the huge number of mutual funds on their own. They want to have them go through a licensed mutual fund dealer. And so even though that person's title is financial advisor, what they actually are is essentially a mutual fund salesperson for the bank. They are licensed to give financial advice to individuals around mutual funds, but they are typically paid basically to sell and help provide mutual funds. But they are licensed to sort of help determine the suitability, what mutual funds might be the right ones for you as an investor. You can't directly access them yourself. If we then look at what we just talked about, the exempt market, private investments, an exempt market dealer is a similar type of financial institution. So an exempt market dealer is a financial institution designed to help investors access and invest into private investments. So an exempt market dealer does something called KYP or know your product. They do some due diligence and review into the different private investments that they have available on their platform. And they also do something called KYC or know your customer and suitability and eligibility to help determine what investments make sense for you in the sort of private investment world that they have available for offer themselves, and to help guide you and help you understand the risks and potential benefits of investing in some of the different investments. So an exempt market dealer is a licensed and regulated sort of middle person for private investments to help make sure that the private investment you're looking at is legit, it's not fake or a scam or anything like that, and to help make sure that you as an investor have somebody you can talk to about whether this investment is right for you.
How does an exempt market dealer, EMD for short, work?
So an EMD, as I mentioned, is licensed as this sort of intermediary group, this intermediary financial institution for private investments. So how does an EMD actually work? What is it doing? So the EMD is working with different private companies or private investments that are looking to raise capital. The EMD does a bunch of due diligence that we call know your product into those different investments to make sure that they fully understand what those are, that they're legit investments, they're not scams, they're not fake. And then it takes all that information and presents it in a way that is approachable and easier to understand for potential investors into the exempt market. They then do the same sort of review called Know Your Client or Know Your Customer, as well as a suitability and eligibility assessment into potential investors. So the EMD then needs to take a detailed look at each of their clients, understand their clients' goals, the types of investments they're looking to make, their risk profile, their ability to withstand or absorb loss, and then based on that, provide suitability and eligibility assessments and determinations for that client. So the client can say, hey, what investment sort of makes sense for me? Essentially, they're doing a review of the companies to make sure they're all legit and good to go. They're doing a review of all the investors to make sure they understand the risks. And then they actually facilitate the transaction. So they move the funds, they make sure the paperwork is being completed correctly by both sides, the company and the investor. And really, they're helping to determine which prospectus exemptions can be used to bring in which investors.
What is an EMD's role in private investing?
So an EMD actually fills several roles to protect and support both companies raising capital and investors. So an EMD acts as a regulated third party to help facilitate these investment transactions. So the first thing is the EMD is moving the money securely. So it's making sure that, okay, the money is coming from the investor and it's going to the company as it's supposed to. It's monitoring the transactions, checking for fraud, money laundering, anti-terrorist financing, all these sort of different rules that are in place to help protect the community. And then they're also ensuring that investors are given the right suitability and eligibility reviews so that they understand what type of investments that they're getting into. They're completing background checks and they're doing ID verification of the investors, just like any other financial institution. And then they're also working to help protect companies. So they're helping the companies understand everything involved in the capital raising process. And of course, they're doing something that we call Know Your Product, which is a due diligence review and assessment into the company itself. So confirming the company is real, is legit, there's no fraud going on, and then helping the company determine what different sets of rules they can raise capital under, which is called the Prospectus Exemptions. So they're helping the company determine, okay, if you want to raise from this type of investor, you need this paperwork. Or if you want to raise this from this type of investor, you need this paperwork and this reporting. And they help essentially raising capital for a private company. There's a lot more rules in place than people might realize. And you can't necessarily just go out as a company and raise money from whoever you like anytime. Anybody on the street can invest into your company. The EMD is there to help these companies actually get access to investors in a safe and secure way for the entire market. In the public markets, there is a stock market that is sort of filling this role. People want to invest. You create an account with your bank. You then invest through the stock market, and the stock market manages those transactions. In the private market, there isn't a stock market, but there are exempt market dealers who are here to sort of fill that role a little bit, making sure all of the participants in the transaction are safe and protected, managing the transaction itself, and being a regulated entity reporting to the government and the securities regulators to make sure that everything is being done properly.
What is suitability/eligibility and why is it important?
So this is one of the most critical and core functions of an exempt market dealer. Suitability and eligibility is two different pieces, but they're part of the work that an EMD is doing to help support an investor who wants to make a transaction. So suitability is essentially you are thinking about making an investment. Does this investment make sense for you and your financial goals? You're telling me what outcomes you're looking for from your investments, what your risk tolerance level, your experience with private investments is. And the suitability assessment is sort of saying, okay, based on these goals, this investment either does or doesn't make sense for you, and this is why. Eligibility is then adding on a level of, okay, this company is raising capital through these prospectus exemptions. This exemption only allows certain types of investors to invest. Are you one of those types of investors? No. What about this exemption? Okay, this exemption allows investors with these qualities. Do you match that? Okay, potentially yes or no. Essentially, it's, does this investment even make sense for you in the first place? Is this something that matches your stated goals and outcomes? And then two, is this investment even legally allowed to accept your money? And then, of course, throughout this whole thing, what is the investment amount going into this transaction? What is this as a percentage of your portfolio? Obviously, private investments carry higher risk than public investments. So will you be able to maintain and sort of continue your lifestyle if this investment was to be unsuccessful? Can you handle the loss associated with it? All of those sort of pieces are all involved and more in a suitability and eligibility assessment.
Why not invest directly myself into these private companies?
So there are certain prospectus exemptions that do allow certain types of investors to invest directly. And there's a number of prospectus exemptions in Ontario. So I'm not going to necessarily list them all out, but essentially there are several exemptions that can allow an investor to invest directly into the company without using an exempt market dealer. Essentially, these are limited to either immediate friends and family of that company itself or somebody connected to the company directly. It's limited to what are called accredited investors. So these are high net worth investors with over 200,000 in annual income, 300,000 combined with a spouse, or $1 million in net financial assets, or $5 million in net worth. Net financial assets do not include real estate of any kind. So unless you are an accredited investor or family and friends of the company, or actually now a new category called self-certified investor, which means you have specific knowledge or experience related to this company and this investment specifically, it's very, very challenging or basically impossible to invest directly into a company. Now, it is possible for regular everyday Canadians to invest into private companies, certainly, but you just can't do it directly. And essentially, the thinking is private investments don't have all of the same requirements, the information, the accessibility, the reviews by professionals that public ones do. It's just a company that doesn't have the same level of sort of government oversight or reporting involved. And so for this company to be able to go out to the general public, the potential for there to be information that should be disclosed to an investor that the investor might not get, the potential to sort of misuse that ability is quite high. And so the government is saying, okay, to help protect the general public, we want to put somebody in the middle where if a company wants to go out to the general public, even if they're totally staying private, they're never going to go public ever, we want to make sure there's somebody in there that can help make sure, okay, everything here is correct, it is verified, it's true, and they're approaching potential investors in the right way. For example, if a company was going forward to people directly, they might be saying, oh, I promise I'll give you 20% return every year. I promise, this is a very low risk investment. Everything's all legit. This is great. The onus would then entirely be on the individual investor to verify everything they're saying. Firstly, is this even a real company? Is this company actually owned by this person? Who is this person? Are they who they say they are? And then you're looking at, okay, what is this investment opportunity? Does this even make sense? They're promising me 20% return. Can anyone promise that? How is this return actually guaranteed? And then looking at, you basically have to go through and individually verify every single thing that the company is saying to even know that it's true before you would even begin saying, okay, does this investment even make sense for me? And If the company's saying, I promise you 20% return, there's no risk at all, it's very, very low risk. After you've done the verification, you would figure out both of those statements are not true. Every investment carries risk, and private investments are automatically considered high risk. That really changes, okay, is this the type of investment you want to make? And what amount of your overall investment portfolio would you be willing to put towards an investment like this? So basically combining and doing all of that work is quite a large amount of time and effort and requires an extreme level of expertise that many people in the general public may not have. Like we in Ontario, we only recently had financial literacy added to the high school curriculum, and it's continuing to be improved upon all the time. But the level of knowledge that, for example, my team has developed over multiple years in assessing companies, determining their value, running background checks, verifying information, looking things up, asking for additional documents, like the amount of work that's going into even making a company available to investors. If you were to able to invest or be able to invest directly, essentially we're forcing you to do all of that work yourself. Or if you don't know how, you don't get the benefit of any of that work being done. And so you're just hoping that everything is true and verified and it's legitimate. So essentially, you can make private investments directly if you're a certain type of investor, essentially very high net worth or an immediate friends and family. And that's because the government is hoping, one, the person, the company, and so you can make a determination of whether what they're saying is true or not, or two, you have a large enough amount of money that you could absorb a loss if all of this money was to disappear and go away. To access the general public, the government requires that there's somebody in the middle to make sure that nothing is being done fraudulently. Somebody can manage the transaction and make sure the money is going where it's supposed to, and you understand the risks associated with such an investment. And that's what an exempt market dealer is.
Hey, what are some employee roles at an EMD?
So when an EMD is actually going out and getting licensed and getting created, there are certain roles that an EMD has to have. So an EMD is it's a bit of an interesting type of company. It's an interesting type of organization. You know, often you think about other types of certifications and you'd think, okay, becoming an engineer, I went to university, I studied, I passed all my exams. I personally am now an engineer. I can say that. Or I went to law school and then wrote the bar. Now I am officially a lawyer, me personally. With an exempt market dealer, the company is the exempt market dealer. No individual person can become an exempt market dealer. But at the same time, the company, exempt market dealer, requires people to be employees of the company and fill specific roles in order for the company to be approved. So you can't apply to the government to be an exempt market dealer without having specific people in these different roles. And those people will be reviewed and verified to determine if they are suitable for those roles before the government will actually grant your approval. So the three different roles that any exempt market dealer is required to have, the first is the ultimate designated person. Yes, this is an official title. It's a little bit of a funny name, but essentially, this is the person who is actually responsible for all of the actions undertaken by the exempt market dealer. Any person at the EMD, any other employee who's doing actions, this one individual is actually responsible for the actions that everyone at the company takes. Normally, corporations, their board of directors are responsible, but they can get board insurance and essentially have insurance protecting them if anything were to go wrong. And then there wouldn't be sort of direct responsibility. If we look back to the recession, the global recession in 2008, right? There was a lot of banks and financial firms around the world that sort of did different actions, and they were hugely detrimental to essentially the global markets. But there didn't seem to be a ton of individuals at the top who were held directly responsible. There were several who were, but it felt like, I think, to the general public that a lot of people weren't held responsible. With an exempt market dealer, the ultimate designated person is the individual that takes that responsibility and bears it personally. So there are specific penalties and fines and potentially even jail time associated with that ultimate designated person role if things were to not go the way they're supposed to at the firm. The next required role is a chief compliance officer. So this person has to have passed a whole different number of exams, has a certain amount of work experience in a compliance department, has to really understand how to maintain the compliance of the exempt market dealer with all of the different government requirements that exempt market dealers have. And then finally, the third role is dealing representative. So this person is licensed differently than chief compliance officer. They've passed different exams, and this person is the one who's actually licensed to go out and provide that suitability and eligibility assessments, talk to investors and give them that advice about their investments. So when you're applying to be an EMD, you have to have an ultimate designated person, a UDP. You have to have a chief compliance officer, and you have to have a dealing representative. Now, technically, those could all be the same person, but to qualify as each of the different roles, you need to have passed a variety of different exams, different work experience, and all of these sort of different things. And this is sort of required. So even if you on your own, for example, were to go and complete the exam called the Exempt Market Proficiency course required to become a dealing representative, just because you've passed that exam doesn't make you a dealing representative. You're only a dealing representative when you are added to the license of an exempt market dealer and the regulators approve the addition of this person to that license. So you can't just say, oh, this person's passed their course, they qualify as an EMD or as a dealing rep, they can now give financial advice. The whole system sort of has to function as one. So if you're applying to become an exempt market dealer and the regulators don't like your UDP, or they don't like your chief compliance officer, or they don't like your dealing representative, the entire application goes back and you start from the beginning. So all the different levels of the EMD all have to be working together. They're all reviewed and assessed by the government. The government looks very closely, the regulators specifically, the securities regulators, look very closely at exempt market dealers, how they're working, their internal processes. All of these things need to be reviewed closely and approved by the regulators before an EMD is allowed to begin operations.
How do EMDs operate?
So what does an EMD actually do and how do EMDs actually operate? So let's first acknowledge that there's a few different ways that exempt market dealers can operate in the Canadian market. Let's use Equivesto as our first example. So Equivesto operates an online platform for our EMD. And essentially, the way we operate that is companies reach out and talk about a desire to use our platform and raise capital through our portal and via us as an exempt market dealer. Equivesto completes our know your product due diligence assessment into all of the information about those individual companies, and we complete that review, which usually takes several months, and then we make the company available and listed on the portal. At the same time, investors can come to the portal looking for individual investments. Equivesto does not go out trying to sell investments, and when we have investor clients, we do not actively sell to those investor clients. So the way Equivesto works, we're not picking up the phone and calling you once you're an Equivesto client saying, hey, here's a new trade that I recommend for you personally. I think you should invest in it. Equivesto is set up almost as a self-service or self-directed platform. So individual investors can come and apply to become an investor based on the information provided in our suitability, eligibility assessments, and KYC. We would approve investors as one of several different investor account types. They're all listed in our learning center. And essentially, once your account type is approved, you're also going to be given individual investment limits based on your personal suitability and eligibility assessments. And then you're able to look at the different investments that are available on the platform for your different investor account type and based on your investment limits. You can then look at the investments directly yourself. You can then choose an investment. All the information is made available to you. You can choose an investment that you yourself are interested in. If you have questions, you can reach out and one of the dealing representatives can speak to you about that investment and help answer your questions. But if you do want to transact, then through the platform, you can actually go ahead and make your own self-directed transaction. The platform is going to automatically limit transactions to you based on your investor account type and your individual limits. Once you make that transaction, there's still going to be a dealing representative who reviews and assesses that transaction after you've submitted the transaction as a request before it's approved, but that all happens in the background and doesn't necessarily involve you. So Equivesto is really set up and designed as a self-directed investment platform. There are other exempt market dealers, more traditional exempt market dealers, who actually manage all or a sizable portion of their clients' funds. So in that type of situation, clients might approach the exempt market dealer. The exempt market dealer might have a really, really large list of private investment products. And just like talking to a financial advisor, you'd meet with your dealing representative. You would talk to them and say, okay, I've got $100,000 that I want to invest into private investments. Can you look through the different products, figure out which ones are the right ones for me, and allocate the money that way? So then the dealing representative would review, would determine what sort of makes sense, and then would get your confirmation before actually submitting those transactions for you. So that's much more of a, okay, this person is actually monitoring and managing your investments on your behalf and with your support through the exempt market dealer. So there's a whole range of how EMDs can use their license. There's other EMDs that do much more direct outreach. So they'd have a list of investor clients, but they're not necessarily managing those people's money. But they've said, hey, we're interested in private investments. If you get investments that are kind of like this, please give me a call. So then the EMD would then be reaching out to those individual investors and saying, hey, I know you prefer these types of, private real estate funds. There's a new private real estate fund available. I wanted to call and talk to you about it, tell you a little bit about the investment, and sort of be more active in that direction. So different EMDs approach the market in different ways. All EMDs need to follow the same sort of eligibility and suitability requirements. If the EMD has some sort of exemptions or different rules associated with that, that's actually all posted. There's a government website called Are They Registered, where you can actually go and look up the EMD or the dealing rep and see, okay, are there any terms and conditions on their license, or is it just an open license? If you have questions about how your own EMD is allowed to operate, and essentially is going to be outlining those rules there. But EMDs can operate in a variety of different ways, but at the end of the day, they always have to complete a know your client and a suitability assessment of the investor. They have to complete and know your product assessment of all of the companies and a due diligence into the companies before they can list and raise capital. And every time a trade or investment takes place, they need to do suitability assessment on each individual transaction as it goes through.
Excellent. How do EMDs make money?
So EMDs are one of the very limited types of financial institutions that are allowed to take a success fee or basically like an investment fee, taking a slice of the amount that's been invested as part of a transaction. If you're a company going out to raise capital and somebody's saying, hey, I'm going to introduce you to a bunch of investors, but I want a 2% commission on that investment, for them to legally be able to do that, that individual would need to be a licensed dealing representative working for a regulated exempt market dealer. There's not many situations where somebody can just say, hey, I'm going to take 2 or 3%. without that person also being regulated in some way by a securities regulator. So because the regulators sort of have this window that EMDs are able to participate in, most exempt market dealers are going to be charging some upfront fees to the companies to complete the due diligence. They're going to be charging some sort of success fee or transaction fee or commission on the transaction when it takes place. And some of them will charge additional fees afterwards for filing, for paperwork, things like that. If there's ongoing support needed after the transaction takes place, for example, if they're managing ongoing client relationships, they might charge an annual fee. They may charge a few other things. Some EMDs charge a fee to the investors as well. That percentage of the funds being taken, that can be taken from the investor side or the company side. So for example, if you're investing $100 and the EMD's fee is 1%, if the fee was coming out of the investor side, you would invest $100, but the company would only actually receive an investment of $99. And then the EMD would have taken their fee from you as the investor. If they're taking the fee from the company side, you would invest $100, assuming another 1% fee. The company would issue shares for the value of $100, but the company would then only receive $99 and then an invoice for $1. So essentially, the EMD can charge the fee on sort of either side or both, depending on the EMD structure. Of course, the EMD has to disclose that information to you, and that's all available on the EMD's website. And then, yes, the EMD can charge flat fees for a number of different services they offer. On Equivesto, our fees are all published and visible at the bottom of our website, so you're more than welcome to go and review those there.
Excellent. What are some reporting requirements for EMDs?
So the reporting requirements for EMDs are quite extensive. So EMDs, let's first look at sort of when they're applying and presenting themselves to become licensed as an exempt market dealer. So the EMD has to essentially have this document or series of documents called a policies and procedures manual. This is going to be many, many, many pages, usually multiple hundreds of pages, and is going to outline all of the different things that the EMD is going to do, every process that the EMD as a business is going to do, and it's going to outline what they can and cannot do in relation to that process and how they're going to actually go about their business. So that's quite extensive. The EMD then has to have ongoing reporting requirements to the regulator. So the EMD has to maintain certain capital and solvency requirements. So the EMD has to have excess cash at all times and is not able to, it has to always be reporting to the government that it's maintaining this. And if it breaches this for even one day, it has to report that to the regulators. And if it's in breach for more than a few days, the license will be revoked. The EMD also has to have specific types of insurance coverage at all times, specifically to help protect their clients and others. The EMD has to provide audited financial statements on an annual basis. The EMD also has to maintain records. So the EMD has to maintain detailed records of all transactions, paperwork, correspondence, and internal documents for at least 7 years, and has to maintain detailed client records for that same 7-year time horizon minimum. The EMD has to present and inform any investor clients or other clients of potential conflicts of interest and referral arrangements. They have to disclose how they're handling those. The EMD has to, do ongoing reporting on the movement of the funds themselves. So they need to do anti-terrorist financing reviews and anti-money laundering reviews of every trade and all the flow of the funds, as well as ongoing monthly reporting regarding that. So in EMD, and that's not the full list, but that's everything that I can really go into at this moment. But essentially, there's a quite extensive list of all of the things that an EMD has to do on an ongoing basis. It's a financial institution. It's fully regulated and is, similar in certain ways, certainly to potential experiences as an investor, to a financial advisor that you might visit who's a mutual fund dealer, or other sort of larger financial institutions like banks. So there's all sorts of rules and regulations that governs how the EMD can operate, and that's really there to help protect the community as a whole, to protect the validity and strength of the market, to protect investors, and to protect companies looking to raise capital.
Perfect. And as a final question, how is Equivesto different from other EMBs?
We created Equivesto because we wanted to help make private investments, the exempt market, more accessible to your just sort of all Canadians, to not limit access to only ultra high net worth individuals. So Equivesto is designed and set up to try to provide as much information as possible to investors, to explain all of this stuff about what even is an EMD. How does this work? Because most Canadians have no idea what this is. It's designed and set up where you can create an account and you can look at all the different investments yourself. You can learn and begin to gain those skills to help determine, okay, what investments feel right to me, don't feel right to me. How can I learn about participating in the private market? And then dealing representatives are there if you have specific questions about an investment. We're really designed to say, okay, let's improve accessibility, but make sure that at the forefront is that compliance, that protection, and that suitability for all investors first. So Equivesto is really designed to open the doors and really improve accessibility to all Canadians, but making sure to do so in a safe and compliant way for everyone.
Okay, and with that, we'll wrap up. Thank you, Alex,
Thanks, Ryan.
and everyone who's watching. See you next time.